So technology moves fast, as we know, but to borrow the old Meta, or Facebook it was called back then, motto, should it move fast and break things? How fast is too fast? And what can you do to make sure that innovation is actually serving the consumer's best interest? So we're going to talk about this. Really excited to have this conversation today because we are going to bring in two different perspectives, not necessarily different, but in terms of your backgrounds, what you're focused on, the companies that you run. Ola, I would like to start with you because when I think about disruption, obviously crypto has been the newcomer to the world in the last few years, and you only set up your exchange in 2016, has seen a great success since then. But the last couple of years have been a bit challenging, and namely because there have been a few high-profile cases, fall from grace within that industry. And I just wonder, how can one distinguish between good innovation and bad innovation when it opens up the field to potential bad actors?
Thanks, Joumanna, for the question. I'm very glad also to be here, part of the panel with both of you and QEF. So at BitOasis, for us, responsible innovation is part of our mission. We have a first mover advantage in the region, so we took it on ourselves to also be able to work closely with regulators, whether regulation exists or not, but be able to share the knowledge that we have in terms of how blockchain, crypto, and the innovation within the space works, and how to be able to responsibly allow the market to engage in the technology. So that was part of our mission from day one, and that's something that even myself as a CEO engage in talking to regulators across the region on continuous basis. Ultimately, blockchain, crypto, DeFi, I mean, today sort of all bundled under the umbrella of Web3 is a technology, and it's a tool. It can be used in positive ways to build applications in the financial services industry that allows for more access, that allows for more transparency, and also ultimately yield a lot of gains for industry players, retail, and investors. Or it can actually be used for illicit activities by bad actors, where essentially you see a lot of the be it hacking attempts or fraud or scams. And obviously in the last 18, 24 months, we've seen some of that in the space as well, where certain companies, because they were run by bad actors, ultimately exploded and caused a lot of losses for a lot of retail investors internationally. But that doesn't to say that there's an issue with the technology itself. It's basically how those companies are run, how they've leveraged that technology in their products, in sort of the services that they've offered for customers. So ultimately, regulators need to understand the technology itself and what are the activities that companies are engaging in offering that technology to customers. So what we find as best practices with regulators, and we've seen obviously success in that in the region, is focus on the activity and the products that are being offered, not so much that you regulate the technology or the protocol itself. It's like saying you want to regulate the internet. Well, that's going to be pretty tough because people are going to still have access to it. But if you kind of figure out the gateways and the people who are building those products and essentially productizing it and offering services to those customers in various ways, you could be a broker-dealer, you could be a payment service provider, leveraging blockchain or crypto. Then you start sort of looking into the activity and then figuring out guardrails around the activity to provide safe access and safe adoption.
Before we move to Pierpaolo, I do want to say actually that I'm going to put out a poll for anyone who's watching, and the question that I want to ask that we will go over throughout this discussion is, what are your main concerns of financial innovation? Is it data security? Is it lack of regulation? Is it risk of fraud? Is it possibility of a bubble? So while you're responding to that, Pierpaolo, I'm going to put the question to you. We talk about the use cases for technology, but it needs to be done in a way that is still serving people and protecting your customers. So what is the most effective way to do that, short of too much regulation, which I'm sure we'll talk about?
So we operate in a regulated industry. So going back to your original premise, we believe that we move fast. We have to move fast. And we have something urgent. Our urgency is financial inclusion. We live in a world where still almost half of adults in the whole country, in the whole world don't have access to financial products. So they cannot save, they cannot protect themselves against inflation, they cannot even transact. So they live in a cash economy. In 10 years, that's not going to be the case. And we're very confident of that. So we want to move fast to provide services that are fair, accessible, and open to all those people. But at the same time, we're in a regulated industry, so we cannot break things. And so we took the view 4 years ago, we started 6 years ago, but we took the view 4 years ago that in order to win, we had to do the whole stack. And in order to do the whole stack, we had to be a regulated bank. Because the incumbents use regulatory capture to stop innovation, and we've seen that across a variety of financial services in the world. So in order to win, you have to be able to have the same license as them. And that is how we have a regulated bank in Mexico, we have a regulated bank in Argentina, and we have a regulated bank in Colombia. And so our 8 million users and growing have the confidence that they are operating within the guardrails of a regulated industry, but with the benefits of digital, which are accessibility, fairness, transparency, and real innovation.
Well, we just got an answer now. What are your main concerns of financial innovation? Data security is coming up top. That's interesting. Lack of regulation. We have risk of fraud, possibility of a bubble, probably right at the bottom. That's also a big question because there's so much talk about it. But data security, I'm going to put this question to you because I think you have to be mindful of it given the amount of data that you have aggregated on your systems. That falls somewhat into the domain of regulation, but not far enough. I mean, the regulators haven't gone far enough on data security protection, have they?
If you think about the banking industry, it's an industry that innovated very little in 6 or 7 centuries. Banks in the 15th century used to do loans on paper, and in the 20th century, they were doing loans on paper in a physical place in the middle of the city. That didn't change, but technology is radically changing that. And so in order to build our Uala score, which is our own proprietary data scoring for credit, we use a lot of data points, from your debit transactions with MasterCard to your bill payment, to your cell phone top-ups, even to your other information from your transactions on the phone. We need to be very safe about that, because that's an asset for the company, but it's also, more importantly, a human right for the individual to have that privacy protected. And so we believe in regulation in this space, and we want the regulator to take a very tough stance with other players in the market who are responsible with data. We don't think that that data should be open for sale. And it's up to the regulators in each of our jurisdictions to protect the individual and also to protect the companies. Because at the end of the day, that has to be shared. And we really believe that competition makes everyone better. So we share with the central bank, for instance, in Argentina, our credit data so that people can take their histories and go somewhere else. You got to win on product, not win on hoarding the data and not sharing it, because that is detrimental to society and to the individual.
Ola, I mean, the same question for you and how you think about data security, because the pitch for many of these crypto products is it's anonymous, decentralized. You can give me the full pitch here, but ultimately a safe space, anonymous space for people to transact. And yet you hear of cyber attacks, you hear of leakages. And I wonder how much of a threat that poses to the crypto ecosystem.
Yeah, I would say cybersecurity threats of different types is still an issue in the crypto space. I would put cybersecurity when it comes to safeguarding assets in crypto at a higher priority than data security. I mean, data security, obviously, and storing safely personal data and personal data protection laws that we're seeing maturing in the space as well. Obviously, that remains a top priority for us, but the main priority when it comes to cybersecurity threats is really safeguarding customer assets, because different to the banking industry, on the blockchain, once a transaction is issued, you can't call it back. So it's not like the SWIFT network where banks can collaborate with the sort of SWIFT network provider, central banks, et cetera, sort of to call back funds. In crypto, it's like cash. Once you lose the money from your wallet and someone steals it, you can't get it back unless you find that person and then sort of you negotiate with them. Obviously, that never goes well either. And because of the pseudo-anonymity of the network, it's hard to also identify who the person that compromised it. Obviously, there's analytical tools right now that are quite sophisticated on crypto that can collaborate with law enforcement agencies that ultimately can identify who the hackers are. I mean, obviously, there's sophisticated systems to do that, and some law enforcement agencies were able to successfully identify the cause of certain hacks. But that still remains an issue in crypto. And obviously for us as a regulated entity, so we're regulated under VARA in the UAE, and we also have our approvals as broker-dealer in Bahrain. The top priority for the regulators are also the safeguarding of assets, proper segregation, obviously, when it comes to custody controls. A lot of that because of the fallout of FTX and some of the sort of bigger players in the space that have majorly compromised, consumer protection in that area. I would say those are the top priorities in terms of risks. But also recent surveys here in the region, particularly across professional investors, they've quoted safeguarding assets and also custody measures as a top priority or concern for them to engage in this space as well. Obviously, crypto might be different to other financial technology verticals or banking because it's still an emerging space. Over a decade into the technology or blockchain coming to existence, we're still experiencing, as an ecosystem, hacks that shouldn't actually happen with the sophistication of the regulatory, rules that we're seeing. So it's an evolving space, I would say.
I mean, there's also a super number of frauds and, laundering cases that happen in traditional banking system as well. So it's a universal problem.
Exactly, yeah.
Pierpaolo, let me just ask you, AI, we've had an AI-themed day today, but you mentioned the amount of data that you collect. How is AI helping you be more efficient with that data analysis and collection?
Well, first of all, AI goes into a lot of the processes in machine learning for our credit algorithms. So to be able to issue more credit, what we want to do is to create everyone's credit score. And in societies where a majority of adults don't have access to the system, you have to build that with a lot of sources of information. And then AI is already helping us improve those credit scoring mechanisms. We're in the 6th version of our Uala score, and we hope it improves each new version. And I think that's really important for emerging markets because in many of these economies that are so cash-based, there is no real access to credit. And so that's a very good use. Then we obviously use it for customer service. We think it's going to be a revolution in customer service because you're going to be able to access conversational agents anytime, any place, with very specific questions answered really quickly. And that doesn't mean that you won't have human interaction. I think human interaction will be a really big differentiator and super important for the key relationships, because at the end of the day, we're a digital bank. We want the relationship to be human through the app, because that's our branch, if you will. But it frees the humans to do the more complicated, more important relationship building, and not to answer questions like, where was my last transaction? That's not value add. So AI will help us there. And then finally, it's also helping in the productivity of developers. And we talked about this a lot in the last few years. But over the last 18 months, it's become very clear that it differentiates the good developers from the better developers, making everyone, call it 20 to 40% more productive. And so the value of a great developer vis-a-vis a regular developer is much widened.
Ola, I think it was pretty clear when you talked about the regulatory environment that, and there are increasing amount of regulatory frameworks in the region. I know Qatar also, they're working on it too, for digital assets. I mean, so to what extent do you think that has brought in new entrants into the market, especially in the context of this crypto winter that we experienced over the course of last year?
Yeah, I think in the last year, we've seen more of that momentum picking up. Mostly, I would say, in the UAE with the introduction of the Virtual Asset Regulatory Authority in Dubai. I mean, in the region already had 2 mature regulators issuing crypto frameworks. So you had Abu Dhabi Global Markets, ADGM, Abu Dhabi, and then you had Bahrain as Central Bank of Bahrain. And those frameworks have attracted a number of regional players, such as us, and then some other international players. But I think what kicked off that momentum at high speed was definitely the Virtual Asset Regulatory Authority in Dubai. I think what we've seen with those frameworks is they're definitely focused on responsible innovation, but also to some extent leaning towards experimentation in certain areas where there was sort of more focus on Web3 applications, NFT applications, and to some extent more catered towards retail products versus institutional products. I think there's a bit more focus on institutional products in ADGM. So I think that sort of fresh outlook to regulation ultimately encouraged more international players to come into the region, while seeing obviously some other jurisdictions taking a much more conservative approach, if not a crackdown approach to regulation. I mean, there were cases in the US where you've seen regulation through enforcement, which is really bad news for, good players even, where there were cases, some players in the US had to essentially deal with SEC and pay towards certain fines without clarity of regulation. So I think that sort of play of providing clarity of regulation has yield benefits to those jurisdictions. I think in Qatar we're seeing similar focus on tokenization as well, tokenization of real-world assets. But I think it's very difficult to pick and choose in crypto, given the global nature of the protocol itself. It's hard to sort of single out crypto and just want to sort of focus on one vertical, because it is part and parcel of the full ecosystem. Yeah,
I'm not going to ask you where the price of Bitcoin is going, but because that's a typical question, and that's not why you're here. But there is, there have been a few developments in the crypto space with the launch of ETFs, and I do wonder how that has altered the outlook for the year for cryptocurrencies, the direction of cryptocurrencies.
Yeah, I think that was definitely a positive move and signal for the industry, given what the industry has experienced as setbacks after 2021. So I think getting that confidence vote, from regulators in the sense that they've approved a Bitcoin ETF in the US, had a spillover effect on the industry internationally. There's a direct impact on the price. I think we've seen some of that. I think now there's an expectation that more capital is going to go into the space. And ultimately, with more capital, there's the price prediction obviously changes, and there's more sort of, I would say, positive or bullish view of the asset itself. And then ultimately, it's a confidence vote for other investors that might either want to go directly into the asset or indirectly through a Bitcoin ETF. I think in the region, though, even a recent survey said that close to 70% of professional investors, it was done across the GCC with focus on the UAE, but 70% of professional investors wanted exposure into crypto. I think that, I wouldn't say it was only because of the Bitcoin ETF. I would say primarily it was the clarity of regulation that ultimately professional investors would want. And then added to that, the Bitcoin ETF signaled even sort of more bullish sentiment towards the assets. So it all sort of, leads to the same thing.
I'm going to end on you and take it back to something that you said right at the beginning, which is, financial inclusion is really important for you, and especially in the markets that you operate in. Argentina is one of them. And of course, you've got a new president in Argentina now. I'm curious to see how, as a business leader on the ground, things have evolved ever since Milei came in.
Well, Argentina is undergoing a very big change. And I think this election showed that people wanted a regime change after almost 20 years of a very different type of economic policy. And I think that the inflation rate was so high that people got tired of it. And they chose somebody whose main message was, I'm going to defeat inflation, and I'm going to create the first fiscal surplus in almost 20 years in Argentina. I was reflecting this morning that it's pretty incredible that this year Argentina will have a lower fiscal deficit than Germany, the US, or China. I mean, that's where they're going. And that creates interest from the world. I mean, we've seen more interest in Argentina and our business in Argentina over the last 3 months than over the last 3 years, in the sense that people want to increase their exposure to Argentina, and we see asset prices reflect that in a way that they didn't before. Of course, there's a lot of reforms that need to pass. Argentina needs a structural reform, and it needs to open up so that areas like mining or energy and even the knowledge economy can really grow after a decade of not really growing in real terms. But I think the goal of reducing inflation is a very worthy one, and structural reforms are necessary so that growth can come back.
That's a good place to leave it. Thank you, panelists.
Thank you. Thank you very much.